Hey guys, Glenn and Brittany here with a market update for February 2023. The year started off pretty slow. It's still feeling kind of slow, but a lot of buyers are entering back into the market. So, one thing maybe we can start out by just sharing some stats from February. So to put things in perspective, I think everything's happening at a sort of smaller scale. Right. Like I think we're used to seeing what would maybe consider a normal market, 15,000 something listings, 4,000 something sales. But it's usually the difference in between that kind of paints sort of a clear picture of what's happening in the market. So sales are up 77% compared to January 2023, but listings are only up 5%. So obviously, a lot of people put their plans on hold last year as the interest rates were going up and prices were coming down. So there's new people entering the market, but then there's also people that put their plans on hold that are coming back. So the good old sort of pent up demand. So sales, that's a lot. It's a lot more sales happening than new inventory coming on the market.
A lot more, definitely. It's definitely the buyer demand is outpacing the amount of inventory coming on. And that I've also seen days on market cut in half as well too, because buyers are now stepping back into the ring way faster than they were before, as due to the lack of inventory.
Right. So as far as I guess the climate out there as well, in January, I don't think we really talked about multiple offers too much when we did that market update video, because I think there was like a couple here and there.
Yeah, here and there. Mm-hmm.
But certainly in February, we're hearing a lot of people finding themselves in multiple offers, but not to the same extent as it was pre the peak.
Last year,
post COVID or post pandemic lockdown, right?
Mm-hmm.
So obviously not to scare anybody, but demand. Brittany, you and I, obviously, we've been doing this a long time and we've seen ups and downs. And I think one thing that sort of rings true in this market is there are things that happen that cause people to put their plans on hold or kind of pull back a little bit, but the demand never seems to really go away. They just kind of wait.
No, they wait.
Sort of jump back in. So,
well, this is the time that's a little bit confusing for buyers as well too, because there's so much new on the news. There's so many things personally happening for them. And when buyers are coming back to put an offer in and they see 3 offers coming in, maybe 2 to 3, we're not seeing like the 7, 8, 9, 10, unless it's grossly underlisted. And obviously it was going to get that amount of offers because it was never worth that value in the first place. But 2 to 3 offers, I feel like it's fairly normal for the affordability level, which we'll talk about a little later on. But it's also confusing because they go, well, what do? I don't want to be in this situation. I don't want to be in multiple offers again. But unfortunately, with the lack of density that's happened in Metro Vancouver and with the lack of inventory coming on the market, that's just going to be that is the reality of the marketplace. I feel like in any marketplace that we get in the last how many years we've been in. Right.
And I think, before when interest rates were really low, everybody was like, well, the rates are low. Let's just get in. Mm-hmm. And then there was that, that big pause to see how high rates are going to go and what's going to happen with prices. And then, the narrative kind of changed to being like, well, hey, let's focus on the price. And it's always been that way. But when people saw the low rates, all they could think about was rates. Yes. So now I think that also some people are some people are getting sort of getting the message and being like, yeah, you know what, maybe a higher interest rate for 2 to 3 years is okay if I'm getting the property at a lower price and the gain in the equity. So it's always, you should always be, more so focusing on the price of the real estate, not so much the rate, right? For the long term. Right. And I think
that's tough. It's tough for people right now because you're so hyper focused on the interest rate and things that you're going to pay other people rather than thinking of what the prices is for the long term. So It's hard because it's so funny. I was having this conversation with a buyer today, and they're going, look, we're older than you, Britt. Like this interest rate right here, this isn't normal for us. And what we've had in the past, how many years is not a normal. It's been great, but it's not a normal. So I think that's sort of what buyers are sort of feeling at this time right now, because this doesn't feel like a normal to them, which it's going to become a normal. So
Right.
and I think people are slowly becoming just acclimatized to that. So
yeah, no, I agree. And I know you said a while back, like this could have been over a year ago too, is, a lot of people have made short-term gains in real estate. Like they're doing really well in a very short period of time. And that almost seemed like that became like the norm. So it's like, whoa, hold on a second, like slow down, long-term, make the smartest decision you can based on your situation and so on and so forth. Right.
of course.
So like one thing that we always, well, everyone's always wondering where prices are going. And, that I think is heavily going to depend on where rates go and what happens with inventory, right?
Exactly.
But one thing that, we always harp on and sort of stress is for people, like, I mean, everything that we've just been talking about is, we're just talking about the market kind of in general, right? But how different certain neighborhoods can be performing differently than one another, like neighborhoods alone, property type for sure, and then the price points, right? So I mean, we touched a little bit on just the real estate board stats, and that was for all of Greater Vancouver, but I've got some stats just for downtown Vancouver, just out of curiosity. I also just looked at some for Mount Pleasant, and Mount Pleasant, like I was just glancing at entry level stuff. Like now these stats that we're looking at, our real estate board uses is a sales ratio. So total inventory divided by the number of sales that month is going to give you a percentage. The analysts say anything 12% and below would be considered a buyer's market, possibly downward pressure on prices. 20% and up would be a seller's market, with upward pressure on prices. Anything in the middle would be balanced. So, I mean, I was looking at Mount Pleasant and that was sitting at 28%, but then I thought I'd just see what downtown was doing, because, some people say like, yeah, downtown still kind of feels like it's on sale. So, looking at all downtown, so there's only a few neighborhoods, right? Cole Harbour, downtown, East and West, West End, and Yaletown. So those are, for the most part, all sitting at a balanced market. I mean, Cole Harbour's 10%, so slightly favoring the buyers there. But then downtown, West End, and Yaletown, they're 16%, 18%, and 16%. But then even more, so that's just the neighborhoods, the areas. But then when you slide over and you look at the prices, like 400 to 500,000 is 71%. So in February, there were 7 listings and 5 of them sold. And then they continue up, over 30 until you get to, 800 and 900 is 15%, 900 to a million, 26%. But then when you get to 1.25 and up, you're 11%, 12%, 2%, some 3%. So that's 1.25 million all the way up to 5 million, right? So, what I'm taking from this is, it seems like the entry level in any neighborhood or property type gets the most attention. And I think that's, as expected, but
the affordability factor.
Right. And it just shows how different price points can be. So when somebody's like, oh yeah, the market's doing this downtown, it's like, well, for what price point are we talking about?
Right? It's very important to talk about what price point, because again, there's so many micro markets within each neighborhood. And to talk about a $600,000 listing in downtown compared to a $3 million condo listing downtown are going to be two incredibly different marketplaces. And that's like with every market within everywhere. I was looking at one actually in Ocean Park in South Surrey, and have a few clients looking at properties there. And I just was taking a look and going, okay, what's the level of affordability, looking at each price point. And it's definitely around that like 2.2 and lower, because it is a very, very high seller's market. And actually quite a few listings are selling, because sometimes I like to look at the stats and go, okay, what's the sales ratio, but how much was listed compared to how much was sold? And sometimes if there's only 3 listings and 1 sold, that's obviously going to skew the ratio. So there's quite a few sold in Ocean Park. It was a low sellers market, so it was 21%. But in Elgin Chantrell, these are the two of the higher priced areas in South Surrey, Elgin Chantrell being one of them. Interesting enough, they had 0 sales last month, which was unheard of. They had only 4 sales this last month, which was February, and it was a balanced market. So we're definitely seeing a change happening a little bit in that neighborhood, but definitely because the higher density areas are a little bit further closer to the highway. So those have a little bit more of the more affordable houses that most people can. But I'm definitely seeing anything below 2.2 million is definitely a seller's market, but anything above, it's good to be a buyer. So,
right. Yeah. So I think the message, like, just to sort of wrap things up, I mean, I think the message, obviously inventory is low. The amount of sales that are happening are considered to be low as well, but the sales are outpacing the amount of inventory that's coming on. So, heading into the spring market, we'll see how much more inventory comes to market. We'll be seeing what's going to happen with interest rates as well.
So yeah, Bank of Canada is going to take what it sounds like. It's going to take a little bit of a pause March 8th to gain some more data and not do much with this announcement. So I think the next couple months will be really telling. I think we're all going to be cautiously optimistic. So
yeah. So I know for anybody out there that's following along in the market, if you're watching this video, if you haven't engaged with a realtor, certainly, we'd love to have the conversation. But I think what's important right now, and it's important in most markets, but I think what's really important right now is to start having the conversations and at least get a plan in place, at least start developing a relationship and watch the market and watch the listings. You don't have to do anything that you don't want to do until you're ready to. But I think being prepared is really important, because it does seem like the good properties are getting purchased quickly right now.
Yes.
So you want to make sure you're fully ready, right? So if you want to sit and watch things for a little bit, if go ahead, but just be ready. Just make sure you're
ready to move when you need to. And also, if you do have a mortgage rate and you're thinking about getting into those fixed terms, you might want to talk to your mortgage broker or mortgage specialist ASAP, because fixed rates are supposedly going up March the 8th. So
and that's 2 days from now. So
2 days from now. So
so maybe by the time you guys are watching this, it's 1 day from now. Okay?
Hopefully.
So make a call right away.
Make a call.
Just lock it. Just
be ready, guys. That's all you have to do.
No.
Alrighty.
Yeah. And then any questions for anybody watching, just reach out. We're always available to have a chat about the market and offer some insight and share some stats and all that good stuff.
Of course. Thanks, everyone.